Ladies and gentlemen, good day and welcome to Rico Auto Industries Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Ms. Hazel Rathod. Thank you and over to you, ma'am.
Thank you. Good evening, everyone, and thank you for joining us for Rico Auto Industries Q2 FY26 earnings conference call. From the management, we have with us Mr. Arvind Kapoor, Chairman, CEO and Managing Director, Mr. R.K. Miglani, Executive Director, Mr. Kaushalendra Verma, Executive Director, Mr. Naveen Sorot, Chief Financial Officer, Ms. Ruchika Gupta, Company Secretary, and Mr. Rakesh Sharma, Strategy Advisor. I now request Mr. Kaushalendra Verma to take us through the key opening remarks, after which we can open the floor for the question and answer session. Thank you and over to you, sir.
Thank you so much. Good evening, everyone. Once again, a very warm welcome to all of you, and thank you for joining the Rico Auto Industries Limited earnings release conference call for the second quarter of FY25-26. I am Kaushalendra Verma speaking to you from the corporate office. I am joined today by our Chairman and Managing Director, Mr. Arvind Kapoor, Mr. R.K. Miglani, Executive Director, Mr. Naveen Sorot, CFO, and other senior colleagues of the leadership team. This quarter, we deliver a stable performance despite a mixed global business environment. International market continued to experience moderate production schedules and supply chain uncertainties driven by the geopolitical tension and trade realignment. However, our diversified customer portfolio, new program ramp-ups, and strong operational discipline enable us to stay resilient. On the domestic front, demand remained healthy across the key automotive segments. Our long-standing OEM partnership and focused execution helped us to capture momentum in the market. Inflation saw notable relief following GST rationalization. Retail inflation softened to around 0.25% in October, and the GST rate reduction from 28% to 18% in September 25 contributed to improved affordability in the automobile, supporting the overall industry demand. We are closely watching the overall impact of the GST reduction in the month of November. The volume of the month of November will define the future projections of the demand post GST reduction. December is normally a low demand month as we have the introduction of the new model, but the peak demand which will impact after the GST reduction in the month of January to March. During the quarter, we continue to strengthen cost efficiency, sharpen our quality systems and invest in capabilities that position us for sustainable growth with a soft focus on operational excellence, prudent capital allocation and customer engagement. We would like to also communicate to you that most of the Maruti Suzuki, Tata Motors, Toyota and Honda, they have announced a huge investment in India, keeping the overall growth of the automobile market in the country. So we have the positive sentiments. With this, I look forward to sharing more in details as we progress through the call. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yash Jhunjhunwala, an investor. Please proceed.
Hi, firstly, congratulations for a good set of numbers posted. My first question is on the margins. Are we still on track to report 12-13% EBITDA margins in Q4 of FY26? Because quarter on quarter, I can see that our margins have slightly come off.
Yes, absolutely. We are going in this direction. All efforts are towards that direction.
And with the introduction of the new products, And yes, with the introduction of the new products which are coming in, those are all in the better margin bracket. That includes the exports as well as the domestic market.
So can you explain why our margins have come off in Q2?
In Q2 also, if you see, our margins are in line as far as standalone is concerned. There is an improvement, and in consolidated also, it is almost at the same level compared to same quarter last year, which was 9.3% EBITDA. This time it is 9.9%. In between Q1, although it was 10.1%, but this small thing is there. But otherwise, we are in track. And Q3 and Q4, you will see much more improvement.
See, what is happening is the better utilization of our equipment where the investments have already been made. We had mentioned to you that the third quarter and fourth quarter are going to be very good, mainly because of our new products which are going to be introduced and both for the domestic and the export market. So it's actually the better utilization of the current equipment we already have invested in. So you see that change happening, and we have the confidence that we are getting towards that.
Got it. My second question is on the debt figure. I can see that our borrowings have also increased from about 274 crores to 330 crores. Why is that so?
Simultaneously, you would have noticed that in short-term borrowings, there is a reduction. In fact, there are two reasons why long-term borrowings have risen, because there is a greenfield project that is undergoing in Hosur. So for that, we have taken the loan. That is for capacity expansion and new business. And at consolidated level, if you see at the total debt level, it stays at the same level of 670. Now it is 670 CR. Earlier it was 672 at the end of last year. So it is almost at the same level. But mainly the long-term debt is for the new Hosur project that is going on.
I mean, can you just provide some color on how are we tackling borrowings going ahead?
Every year we are repaying around 100 CR of borrowings. So simultaneously, two things are happening, that we are repaying 100 CR of borrowings. And on working capital front, we are reducing it continuously. You would have noticed for last 4 to 6 quarters, we have been reducing on working capital front. But as far as long term is concerned, since new greenfield project is there, that's why this increase is happening. So this year you will see some increase in the long term borrowings, but next year onwards it will come down.
So this is mainly for the Toyota and ICE project, which is for the hybrids for Toyota, for Mahindra, and Tata and Maruti.
And EV also.
And also electric vehicle component.
Yeah.
Okay. And my last question is just to understand, are we still on track to report like 50-70 crore revenue from the railway and defense segment this year?
Yes, we are progressing more on the railway side, and there the results are happening, and we've also got, we are in the process of getting some approvals from RDSO also for the railways, and their inspection is to take place, I think, next week sometimes. And as the inspection takes place, we could start delivering the products to the railways and also to some of the companies who are already supplying to the railways. So that process is already on. We already started delivering.
Already started delivering. So,
Yeah.
So railways have started contributing to revenue already?
Yeah.
Okay, so we will manage to do that 70 to 80 crore in FY26.
We've already developed, I think, about 34 or 36 components for the railways, different assemblies and different components. So we have been delivering to the sub-vendors of the railways, and after our RDSO approval, we'll start delivering directly.
So we are holding on to our guidance of 80-90 crores in FY26.
Absolutely. Yeah, absolutely.
Okay. Thank you. That's all from my side.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Deepak Podar from Sapphire Capital. Please proceed.
Yeah, I'm audible, sir.
Yes.
Yeah. First of all, thank you very much for this opportunity and many congratulations for good set of numbers. So now on the revenue front, I think we had said in the last call around 2,600 crores of execution for this year. So how are we placed there, given the growth profile in the first half have been lower?
See, in the first half also at consolidated level, we have grown by almost 5%, but earlier also our guidance was that in quarter 3 and 4, the increase is going to be comparatively more because new products are getting introduced. And that applies to profitability also because those are at a better margin. But on the export front, if we see, compared to last year, our year-on-year, if we see quarter, the exports have grown by almost 22%. So that is mainly on account of sales in US, which has increased. So exports are increasing, domestic sale is also increasing, and we are on track to achieve approximately 2,600 crore of sales by the year end.
Oh, that's great.
So in the first half, we are short by 58 crores as per our budget is concerned. But we are fairly having said that, this is primarily because some of the customers have delayed their projects. So to cover up that, we have picked up new components and also increased our share of business with the current customers.
Okay, understood. So you mentioned that this tariff has been lowered, right, from the month of November, from earlier maybe 50% plus to 28%?
No, it has not been lowered as of now, but it was in two tranches. One was 25% earlier, for which we have already have got arrangement with the customers that they are bearing that 25%. Now another 25% on most of the components, it is not applicable in our case. In some of the components, it is applicable, where we are in talks with the customer to pass on this thing also to the customer.
Despite that, our sales are increasing to the US, and there are many more additional components which are coming up in the coming months.
Okay. No, so I missed the point on additional. So additional 25% is also we are in discussion with customers to be borne by them.
No, one minute. There was, the total duty and tariff it is about 2.5% plus some shares comes to about 3.25%, plus 25% is the tariff that was imposed first. That comes to about 28-29%. And then there was an additional 25% which was introduced, but I think Mr. Donald Trump forgot to include the auto components in that. So we are very lucky that we are paying only 28% at the moment.
Okay. So auto component is not included there. So 28%, and that we have discussed with customers.
I would say most of the auto components are not included, and lately when he introduced the new tariff for commercial vehicles, on that he's from 10% he's taken it up to 50% on commercial vehicles. So what we supplied to Cummins, which was at 10% earlier, that will go to 50%, but the customer is bearing that cost.
Okay. So there is no impact as such on us, right?
On 95% of what we export to US, there is no impact.
And in fact, our sales are increasing in US.
And how much would be US exports? I mean, out of total exports, I think, 15-20%, right?
50%.
Okay. So 50% of exports is from US?
Yes. It's to US.
To US, and 50% of the balance is to Europe.
Okay. So 50% is to the US. Okay. Understood. And now since you mentioned that railways and all our this has started, and even RDSO we are in process of getting the approval, right? I mean, currently we are supplying to sub-vendors, right? That's what you mentioned. Right. So what sort of margin profile we have there?
Those are definitely better margins, and that I think we work. When we started supplying, we were working on about 5% only, but now we are in the bracket of about 18 to 20%. And this is to the sub-vendors we are talking of. But when we supply to the railways, obviously the margins will be different.
Okay. No, so this 80-90 crores that you mentioned that from railways or defense, that margin profile of 18-20% we can maintain?
Average out would be a little less, but now the newer supplies are at that level.
Okay. And we are talking about EBITDA margin here, right?
Yes.
Okay. And defense, so how are things in defense? You mentioned that we are little lagging in the defense side, right? So can you throw some more light?
Lagging. It's like our proposal, we are talking to for the BrahMos, and we are talking for many other ammunition that are there. So a lot of discussions are taking place, and I think we will be there. At the moment, we are supplying the ranges, the shooting ranges that we had mentioned last time also.
Okay. So any timeline we have, or that by when we can expect defense revenue to start?
It appears the railways will be much faster than the defense.
Okay. Understood. And my second question is on your monetization. I mean, we were in the process of land monetization, so around 1,000-1,200 crores, right? So how are we placed there? Can you throw some more light on that?
So we have been explaining this on almost every conference, and we are very open to monetization of this land where we are sitting at the moment. And this is about 27 acres and 26 now 27 acres. And it's a prime land, and the offers that we got a couple of months back, or we've been getting over time, the total profit that we were earning was just about 400 crores or something. I don't think that was enough to satisfy my shareholders. We are expecting much more for this property, because there's a lot of expenses which will happen when we shift the plants from here. It's not going to be easy. There are almost 2,500 people here. There's a lot of equipment here, a lot of machines which need to be transferred. A lot of permissions also need to be taken from our customers. So there are costs involved in that. We are very clear about those costs, and the timeline would be about a year and a half for shifting after we settle. But till we get a good value, and till we can get a gain for our shareholders, we will not just do it for 400 crores.
Okay. So the price that you were offered was not as per your expectation?
No, they offered much less, and so we said no. And now, of course, the same people are coming back for double the whatever they said earlier. But we told them that we want to cross 1,500 crores in any case.
Okay. Understood. And just couple of more things from my side. Now you mentioned that your margins 12 to 13% efforts are there by fourth quarter, right? Currently, I think we are at around close to 10%. So this gap of 2 to 3% in next 2 quarters. So what would be the drivers there? So what would drive your margins in what we are already in the month of November, right?
Yeah. See, there are two things which are happening. One is the better utilization of the current capacities which have been created. To give an example, the iron foundry was running at 40%. Now it's running at about 50-52%. It will go up to about 65-70%. And as the orders we already have in hand, next year our foundry is going to be in the region of almost about 90% utilization. And the investment in a new foundry today is about 2,500 crores. And now we invested long term back, and everything is in place, and so we are expanding our customer base there. And the same thing applies to the aluminum side. Earlier we were running at about 65-70%. We improved our efficiencies. We brought down by improving the efficiencies, the utilization came down to about 50%. And but now with the new orders coming in, we are creeping up, and I think by next year we should also be in about 80-85% as far as the die cast is concerned. So these are huge investments, the large investments that have taken place many years back. So that is going to be the first trigger for the 13% plus that we are talking of. Then the new components that we have. Yeah.
So this will happen over the next 3-4 months, or is it as we speak? It's already happening.
See, we have the visibility that we will be at 85% plus by next year, and every month you will see a change. Every quarter you will actually see a change, and we have said this even 2 quarters back. That every quarter you will see a change happening because of the new introduction of parts.
Okay. So the one major point was better utilization of your assets, right? That's what.
And so better utilization of assets with newer orders which we have received, which are at better margin.
Okay, newer order is at better margins. Okay.
Yeah, they are
And even
all above 14-15%.
And even newer products, right? I mean, you mentioned about
All new products are above 15%. Yes, absolutely.
And just one last thing, I got this. Now we are always, we are close to the year end. So was looking for any kind of outlook for next year, FY27. If you could provide anything on that front.
I mean, we do have the figures here, but we have the figures after 28, 29.
Whatever you are comfortable with. Yeah.
So we are targeting 3,000 plus, 3,100 plus for the next year, and say 3,000 plus. And but the figure that I have is higher than this, but I don't want to talk of the figure. It is primarily because of the new introduction of parts. If some customer delays it, then we normally cut a sorry figure there. So I'm taking a little conservative and say 3,000 plus.
And what margins? Because fourth quarter, if you are closing it at 12-13%,
every quarter you see an improvement of margins, and you'll be happy with the new margins that will be there.
But just looking at the aspirational margin profile, I mean, a 14-15% would be our aspirational margin over the medium term. My
aspiration is 20%. I mean, aspirations are different, but let's see. So, we are always trying to improve our margin.
Okay. I think that would be from my side. All the way best to you. Thank you so much.
Thank you.
Thank you. As a reminder to participants who wishes to ask a question, may press star and 1 now. Participants who wish to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Raga from Lindsay. Please proceed.
Hello, am I audible, sir?
Yes, you are.
My first question is, what is the kind of peak revenue we can do in 2 to 3 years once our entire capacity is utilized, including our greenfield project in Hosur?
Okay, now I'm talking of totally, this is all greenfield and also no acquisitions here.
Right.
We have from whatever visibility we have on the orders in hand, and also discussions that are taking place, we are talking of close to 4,000 by 28-29.
Okay. And my other question is, we have been stuck at a low capacity utilization for, last 2-3 years. So, is it possible for us to, go slow on capex after this and reduce debt and improve our balance sheet before going for a new round of expansion?
See, the expansion, the expansion that takes place is primarily for the iron components and aluminum components that we produce. So the major investment normally takes place in the casting side, be it the iron side and or be it I'm talking the foundries, and be it the aluminum die casting machines. Those are very, very expensive machines. A 2,800 ton machine will cost us about almost 30 crores. Installed would be about 40 crores. And if you have multiple of those machines, you can imagine where the costs are. And these days, the components are getting bigger and bigger, and so the larger machines are required to be installed. But we already have, I would say, most of the machines in place. And but what we do is the capacities of these, we do better utilization. But these components, after machining, we don't supply only castings. We add further value into those components, and we machine those components and also do some assemblies. So our investment that is taking place is primarily on the machining side. So to better utilize the capacity of the casting units, we need to invest in the machining so that we also get better margin. That is what is happening. And we like to do the machining itself because the margins improve dramatically. But we are very conscious of the investment which are required to be done. Our board is getting tougher and tougher, and they are also very we are happy that they take a lot of interest in whatever investments are happening, and we need to get almost everything approved from the board. So we are very cautious of what is happening, and the board is also very clear as to what direction we need to take.
All right. Thank you so much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Praful Rai from Arch Partners. Please proceed.
Sir, hi, this is Praful. Just one question. We are talking of a major ramp-up in our revenues. Is it that our revenues are linked to some product being launched from some of our customers, and that is how we are mapping our growth? Or we are replacing some existing supplier or vendor in the ecosystem? Because if you're replacing a vendor, then more predictability to revenue. And if we are linking ourselves to growth or launch of some new products coming, then we are linking our numbers with some outcomes at the consumption end. So can you just help us think through?
Yeah. Okay. It's a combination. We are also expanding our capacities or getting a better share of business of whatever we are already supplying to the customers. That's one. And number two is that we are talking of customers like Maruti, who have in the last 30 years, they've whatever they predict, they normally deliver. And we are talking of Toyota, we are talking of Mahindra, we are talking of that class of customers that the orders are mainly from. And we are also looking at exports from BMW and also from GK and other customers overseas. So these customers have normally picked up larger quantities and volumes than whatever they have asked us to invest on. So we are not looking at the aftermarket where it's unpredictable, but we are looking at fairly good, but unless the market collapses, we are fairly sure that this will happen. Then the investment also in dies and jigs and fixtures is given by the customers. So they also make investments in components. So they are also fairly sure that this will come up. That's the reason they put in the money.
Okay, so they're as much invested with us as probably what we are doing. Second question, sir, I wanted to ask on the same line. Suppose if there is some change within the schedule of some customer here and there, are the capacities fungible enough for us to repurpose them for some other customer? Because there's a massive capacity we are talking, before I'm asking.
Yeah. So, in the foundry is totally fungible. We have got to change the patterns, both the aluminum and the iron. And the dies are funded by the customers and the patterns are also funded by the customers. And number one. Number two, for the machining lines, they are all CNCs, they are totally fungible. I would say that whatever investment we do, almost 85% is fungible. And it's about 10% which we can change, but by putting some investment. There's 5% which actually goes to waste. That's what we are very clear in our investment. So that is got to be fungible. It's some gauges which are very special to a component that we are unable to utilize. Otherwise, and some fixtures which the customer has already funded us. Now these are some of the things which which we can't utilize. Otherwise, machines are totally fungible. Totally. They all the CNC machines.
Okay, sir. Thanks a lot. This is a good answer. Thanks a lot.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Nishit Shah, an investor. Please proceed.
Thank you, sir. First of all, congratulations for the good numbers. My question is already answered. It's okay. Just one request, sir. Your voice is like echoing. So can you use the handset, please? Thank you.
Mic turning on. Okay. Am I clear now?
Yes, sir, it's clear.
Okay.
Participants who wish to ask a question may press star and one now.
What's that?
Participants who wishes to ask a question may press star and one now. The next question is from the line of Yash Janjanwala, an investor. Please proceed.
Hi. Just a follow-up question from the previous participant. I think what we're trying to understand is that
Yash, we've lost you. Hello? Mr. Jindal, we lost you.
Yes, sir, we can hear you now. Yes.
yeah, can you hear me now?
Yes, sir.
Yes, we can hear you.
Yeah. So sorry. My question was, according to the last participant, he was trying to ask, are we going to spend more on CapEx on a new plant, or are we going to first utilize our current capacities as well as Hosur and fix our balance sheet, repay our debt, and only then go for our next round of CapEx?
See, our first attempt is always to utilize the current capacities to whatever extent we can. So we try to flog all the assets that we already have. That's the first attempt. And it is wherever specialized machinery is required or additional machinery is required, additional operations are required, there we make investments. And the Hosur is a new plant that is coming up. And now we have been asked by Maruti and Hero and others to set up a plant close to them in Gujarat. So we're looking at the possibility, but our first attempt is going to be to deliver from here, then only set up a new plant. And if at all there's a new plant which comes up, we will be shifting a lot of equipment from this plant to the other plant. That is for sure. But the investment in land and building takes place. That's what we try to avoid as far as possible. And we only invest where required, others we don't do it, and where we are sure that the customers are going to pick up. And our board is very particular about our debt that is there, and they want us to bring down the debt, and we are all working in that direction. And you'll start seeing the results now.
Okay, got it. And just secondly, can you also help us, like this scale up that will happen from roughly about 2,400 crores to 4,000 crore revenues? Which OEMs are we primarily dependent upon for this scale up to be successful?
Yeah, so this is one is of course Maruti Suzuki, then Toyota, including Aisin and Musashi. That's all part of the Toyota supplies. And from Aisin, the supplies will also go to Tata Motors and to Mahindra and to Suzuki and to Honda also. And Nordbremse is a new customer that we have. We have been supplying to them for a couple of years, and there's a very good ramp up that's happening place for Nord. This is for exports, and now we're also looking at the domestic market to supply to Nord. And these are the main customers. Hero, of course, it's only share of business that we keep on stealing from the other suppliers. And so Maruti, Toyota, Nordbremse, Bosch is the other customer that we're looking at.
Bosch. Okay, and is it possible to tell us which product, what model for Maruti or what model for Toyota is going to contribute meaningfully?
It's mainly the electric and the hybrid vehicles we are talking of, where the demand is more and where technology levels are also very high, and it's not that everybody can do it. So we are fortunate that we have that technology to actually get into that. But having said that, we are also supplying to the IC engines. It's both.
Understood. Okay, that kind of answers my question. Thank you so much.
And then the other thing is that Maruti, they produce a lot of these engine blocks in their own plant. Now they are running short of capacities, so they are transferring that business to us, to our plants.
And that will help us utilize our aluminium casting as well.
Yes, we are very happy for that because we have machines which are lying idle.
On the aluminium casting side, right?
Yes.
Got it. Okay, great. All right. My question.
And Maruti, Hero, and all these guys, even Tata Motors and Mahindra, they normally have dual sources of supply. And surprisingly, we are for some of the very critical components like oil pumps or water pumps, we are single source supplier to Maruti for the models that we are supplying. For all the newer models which have actually come up. So that's a huge number. It's almost 4,000 pieces a day or 3,000 pieces a day we supply.
Isn't supply to Hero Moto a lower margin business like the two-wheelers?
Two-wheelers, two-wheelers is always the lowest margin business. But two-wheeler is a good filler. It fills up your capacity very fast and because the numbers are very high.
But it might drag our overall consolidated.
No, but what we do is to utilize capacity, we like to pick up this business so that the capacity can be utilized, mainly the diecast, but without investments. So we pick up the capacity from the two-wheeler guys and start selling. As and when we require that capacity for some other product, we actually reduce our supplies to them and request them to buy from other sources.
All right. Thank you so much.
Thank you. Participants who wish to ask a question may press star and one now. Participants who wishes to ask a question may press star and one now. As there are no further questions from the participants, I now hand the conference over to the management for the closing comments. Over to you, sir.
Well, thank you so much, and it's always a pleasure and honor to talk to our partners, our investors, and we are very open to the questions which are asked, and if at all there are any questions remaining, please do write to us. We will certainly respond to those questions, and we'll be honest and very transparent in whatever we say. But we thought we'll see a lot of growth taking place in the US also, and we thought the tariffs will have a big impact. But fortunately, our sales are going to be increasing by almost 40 to 50% to the US this year, and next year again there'll be another increase of 50% to the US. And in the domestic market also, we are getting larger share of business from both Maruti and from Hero to better utilize our current capacities. And mainly the casting area, that's what our focus is. And with Hero, primarily when we utilize our capacity, it is almost zero investment base, because we try to take a larger share. From 50%, we go up to 70 or 75% of supplies. So that's what we keep on working on, where the investments are zero, but utilizing capacity is more. So we continuously look at that, and the investment the investment is done at the last stage where we don't have a choice but to do it, and we do it only for brand customers like BMW or GKN or Toyota, and for many others we don't do. We actually make the customers co-invest, and but these are some of the prime customers where we are making components which are of very high technology, which they make in their own plants in Japan and other places, and now are willing to pass on those components to us and not to their Japanese partners in India. So that's I think that's a big pat on our back as far as the acceptability by our customers concerned, and as far as the confidence that the customers have in us. And we'll continue to work on this direction. But let me assure you, every quarter you see a margin improvement. We did mention in the beginning of the year that the first 2 quarters there will be slight increase in margin, but in the third or fourth quarter you'll see better increase in margins. We had mentioned that earlier also, and we still maintain that. Thank you so much, and we hope to see you soon. Please do write to us in case of any queries. Thank you.
Thank you. On behalf of Rico Auto Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your line.